Hi, everyone. Welcome to my 2021 Company of the Year video conference. So, which company grew 23,000% in the most recent quarter versus the same quarter a year ago, and is trading for a forward PE of just 6.54, meaning it's a good buy? I'm going to reveal that. Also, why in the world is Bitcoin down almost 40% in just a few weeks? Well, actually, about a month. I'm going to reveal that as well. Well, we'll talk about why the factors that are underlying that. Clearly, we all know that Elon had a big hand in that, but he's not the only hand in that. There were a lot of institutional selling. So let's talk about that and what coins might be interesting as a trading platform, and why cryptocurrency is a trader's delight rather than a currency at this point, and where it belongs in your portfolio. All right, well, all that and more very soon. Stick around. All right, gang. So the 2021 Company of the Year has, as I said, 23% revenue growth year over year. It has one of the lowest forward PEs I've ever seen for this kind of massive growth, and that's at 6.34. The name of the company is Moderna. So let's take a quick look at a few things here. The first thing is you can read more information about this at my blog. So simply go to nataliepace.com/blog, and you should scroll down to the 2021 Company of the Year. You can do a find if you come to this a little bit later and the top blog is a different one. Just do a quick find on 2021 Company of the Year and you'll find it. It's also, I list all of my blogs at the end of each blog, so you'll easily find it if you're doing a search. Now, so I strongly recommend that you read this blog, because not only do I talk more about Moderna and also Fulgent, which is another company I really liked, I talk about the biotechnology risks. I talk about other stocks that could have immunology treatments that might be interesting. And I also talk about something that's really important in today's world. And that is that you have to be applying the 3-ingredient recipe for cooking up profits. So we know that Moderna is a company that is growing by leaps and bounds, and we understand why, because we're in a pandemic, and because it was approved, and because it seems to be working better and not having all of the production issues that Johnson & Johnson had so far, no side effects. So it's really getting the orders in. It's showing by that. They're expecting over $19 billion in sales this year. Last year's sales was under $1 billion. So the growth is absolutely stupendous. And again, it all makes sense. So the story behind it makes sense. It's not something that someone emailed us and told us about. It's something that we can see and touch in the real world. And if you go to their website and look at their press releases, all you see are more and more countries that are signing up for this: Poland, Australia, Israel, the US. So it's endless. They just keep adding more and more countries that want their vaccine. And the vaccine, they bumped it up. They're expecting to administer 800 million doses this year. They're trying to get it to 1 billion. So they may even have better upside surprise. So we have seen stocks and companies that really don't have a lot of a very good story, like AMC or GameStop. I mean, these are companies that were really imploding and on the ropes, hit meme stocks. We've also seen some great companies like Tilray or Cannabis that really end up on these meme stocks. And I definitely think that Moderna has the potential to be a shoot the moon stock. The fundamentals behind it are more exciting than I've ever seen in my lifetime. Sadly, because of the need of what it is. And, for anybody who has suffered or lost someone from COVID, our hearts go out to you. But we're all very excited about the vaccine so we can get back to our normal life. So when we're thinking about Moderna and we're thinking about the price of it today, so again, if you look at the price today, it looks a little expensive. because a price to earnings ratio of 125 on the, or 126 on the trailing 12 months, you know, that's very high because the average PE is 16 or 17. But again, if you look forward and you see that their revenue growth is that 23,000%, that crazy number, you look at the forward PE and it's only 6. And that, my dear, is a very, very, very good value for this company. So when we think about, you know, whether or not we're paying a good price for it, that forward PE tells us, yeah, we really are, especially when you consider the rest of the world. So, you know, the average PE is 16 or 17. Most stocks right now are actually very expensive. I'm just trying to pull up one other chart here. So this is the average price to earnings ratio. It's provided by Professor Robert Shiller out of Yale. He won a Nobel Prize for this. So you can see that right now stocks are very, very expensive. This is the high. So the average is 36 PE, and what it should be is more like 16, 17. The only 2 times in history where price earnings ratios have been higher was in 2000, right before the dot-com recession, and dot-com stocks lost 78%. So if you had $1 million, you know, your portfolio went from $1 million down to 220,000. That's how much money was lost during the dot-com. It took 15 years for the NASDAQ Composite Index to hit back to the highs it hit in March of 2000. Then we had the Great Depression, and that, of course, took decades. So when you think of the average PE at 16 or 17, today's price earnings ratio is more like 36. Moderna's forward PE at 6, it sounds like a very good buy. So what do you do if it starts shooting the moon? Well, what we've seen with the shoot the moon stocks is that they hit there and then they tend to drop. So let me just show you real quickly a couple of charts just so you see what I mean. So as an example, if we look at GameStop, which happens to be, you know, one of the meme stocks, one of the Reddit stocks. So it's at 170 now. And if we look at its 5-year, you can see that this has been a real roller coaster. So it went up to over like 400. Actually, it went up to 483, and then it dropped back down to 50. And now then it went up to, 200, and then it's now at 170 now. So this is a real roller coaster. And it's stayed at that 483 point for such a brief period of time. It only looks like a knife drop down. And you're going to see the same thing with like AMC or any of these other meme stocks that are, you know, that's what they are, is they're just a pump and dump scheme, or they're more hype than they are, rationale. So, this one looks the same as a meme stock. Now with Moderna, if it does get popular on the bulletin boards and it shoots the moon, it could go absolutely crazy, just like these did overnight, and then it could fall back down. So I do strongly recommend, with a shoot the moon meme stock potential stock, that you don't think of it as all or nothing. Like if you see something that's going crazy, like definitely have the app on your phone and it's gone up 100%. Or 1,000%, so it's really made you a lot of money, then take some of those gains off the table. Keep it game on just in case it keeps shooting the moon, but you can take a lot of the games off the table. And that gives you the emotional fortitude, if it is a meme stock and it does do the knife drop, that you can buy more at a lower price. This is one that should be good for years to come, because we're sadly probably going to need booster shots too. So this is a new big cap biotech company, is what Moderna is going to end up being. And I think that you're going to be glad that you bought it for this price, because in the years to come, chances are you won't be able to get it at this price again. Even if stocks head south, this one's got a good story to it. So the second one that I mentioned in there was Fulgent. Now, Fulgent does the COVID testing, and it was up 4,500% in the most recent quarter. Now, it's actually dropped from its high massively. So Fulgent's high was about double where it is right now. Its high was at, well, it's actually more than double. It was about 190 and it's at 73. And what you see here is that its price earnings ratio is only 5. So it's really oversold, which means it's a good buy too. Now, in the year to come, it's supposed to double in revenue. So it's supposed to have about 830 million versus 422 million. But as you can see, that's going to put their price to earnings ratio, the forward PE is still very low as well. So I do like this one because the growth is amazing. We're still going to need COVID tests. They have other kind of tests as well. And their growth is good and the profits are pretty good too. Look at that profit margin. And they're expanding into China. So I also wanted to talk a little bit about the cryptocurrency correction. So if we look at Bitcoin and it's currently at 40,000, it's starting to do a little bit of recovery, but the high was 64,899. And that's almost about a 38% drop from the high. Now, this is where having a pie chart system, having a diversified plan and rebalancing it can help you tremendously. So, Bitcoin, cryptocurrency, it's a trader's paradise. There's institutional investors. So big money knows that if they want to keep their gains, they have to actually sell to capture it. They don't have diamond hands. So it's really important for you to know that you can still have some game on and you can profit take as well. So what does that look like? Well, let's say, for instance, that you are, you're only 25 and you're just getting into this game. So put in your age 20. This is my free web app, by the way, Nest Egg Pie Chart web app. And you're not going to overweight anything safe because you think that we're going to have an amazing year. And it is supposed to be a spectacular year of 6.5% GDP growth. And you have your college degree and you are earning $100,000 in the tech industry. And you already have, let's say, $100,000 in your retirement account. So here's what your retirement account should look like if that's the case, right? You're going to keep a percent equal to your age safe. Now, the reason that it's not just 25,000 is that you actually put in an extra 10% of your money in there as well. So it's a little bit bigger than 100,000. It's $110,000 nest egg now. Now, each slice could be 8,250. So if you bought a slice of Bitcoin, and you can buy fractional shares or fractional coins, if you bought $8,250 worth of Bitcoin at the beginning of the year when it was trading at like in the $6,000 a coin range, and then it went up to that 65,000 almost price, right? So it went up 10 times. That's crazy. Now you're going to have 10 slices instead of one slice. And the pie chart system helps you with that because, first of all, your nest egg is going to have gone crazy big. It's going to be much, much bigger. So if you had that one slice, hold on one second, and it went from 8,250 to 82,500, now your liquid assets are 182,500 instead of just 100,000. So your pie chart just got a lot bigger. But in order for you to capture your gain, so you want to sell some of your Bitcoin. And again, if you just kept 2 slices now with your bigger pie chart, you're now worth a lot more. Then you'd have 15,000 that you kept. And you would have what, close to about 60,000 that you sold. And again, that allows you 2 things: the money to buy more at a lower price, the emotional fortitude to buy more at a lower price. So if it goes down by 40% and you want to buy more because your 2 slices are now only 1.5 slice and you want 2 slices, then you can just buy more at that lower price and fill that slice up again. So I think that the slice system is really important for cryptocurrency. That's the first thing I wanted to say. So I strongly encourage all of you to email info@nataliepace.com. In the subject line, put free web apps, and we'll send you these free web apps. Put, in your nest egg, what goes in there, all the savings you have, all of the 401k money you have. You don't put, if you own a house, you don't put the home equity in there. You only put liquid assets. So stocks, bonds, cryptocurrency, and savings accounts, that sort of thing. And then obviously the rest of this is very easy. Just put in your age, take off the overweighting safe, put in your annual income, keep 10%, because you want to put 10% of your salary into your tax protected retirement accounts for your investments. So you can do this yourself. And if you are way overweighted and you have 5 or 6 hot slices of crypto, then it's always a good idea to trim it back so that you capture those gains and you can buy more low. Okay. Now, the other thing I want to talk to you about is, well, what about the fact that Bitcoin is an energy hog, which it is? Is there anything else that's kind of exciting? And yeah, there are. Now, of course, if Elon Musk tweets what he's excited about, that one's going to shoot the moon. But there are some things that people are talking about. And by the way, if you have something that you think is of interest, please send it over to us. We'll take a look at it. So the two that people are really talking about that are lower energy are Cardano, that's a symbol ADA, and you can see they're very low priced right now, and also Matic, and that one is Polygon. Matic is the symbol, and it's lower priced. So those are two that could be of interest to you. Obviously, you can always check the Reddit bulletin boards to see if that's of interest as well. I want to also talk real briefly about scams, because cryptocurrency has rife right now. It's just rife with scams and people that are trying to take your money. I get notices that Elon's giving away Bitcoin, big scam. Be careful, that's a phishing scam. Somebody said, oh, I heard about this great new currency, and they were calling it NRGY, because obviously, now with Elon highlighting something that everybody knew, it was that Bitcoin's an energy hog. So this one is an opportunistic one saying NRGY. So it's going to be energy efficient, and they are marketing the heck out of it. Be very, very careful with these. I feel so sorry for people that get caught up in these MLM scams, coin clubs, and all of this. So do read my blog on cryptocurrency so you can be alerted to the scams as well. So again, if you go to nataliepace.com/blog, it's, the second or third one down. And it was just posted about a week ago. So I strongly recommend that you read this. This was before Elon's tweet about the energy hog and the implosion of Bitcoin that came after that. So it does not include what we just talked about here, which is some of those energy efficient coins. Now, one last thing is that, yes, cryptocurrency and blockchain could be definitely a part of our currency system going forward. They're not really right now. So Tesla's no longer allowing you to buy anything with Bitcoin, and they haven't announced any other cryptocurrency that you can use. Square talks about Bitcoin a lot, but what they're doing is they're buying Bitcoin and selling it to people, and they're booking it as revenue. So that's part of their business model. They're not accepting, it's not yet that people are actually buying and selling goods with cryptocurrency, although because it's on their platform, they could conceivably do that. But it's not a good idea to buy something with currency that was worth $65,000 last month and is only worth $40,000 this month. So it is a trader's platform. So just be cognizant of that right now. And that's one of the reasons why I believe, especially due to the volatility, that the pie chart system is going to help you and serve you best, is that you really want to consider it as a slice, a hot slice or 2 hot slices. And if those 2, 1, 2, 3, or 4, no more, go up to 10 hot slices, it's telling you sell high. If you sell high and you trim it back to 1 slice and it drops by 40%, it's now half a slice, then you can buy more at a lower price. And again, it's within reason. You don't just buy and fill up another 10 slices. Fill up that slice or maybe 2 slices. Don't go crazy with it, because if it shoots the moon again, it fills up multiple slices again for you. All right, so I'm going to go ahead and stop it. And if anybody has any comments or questions, we can have a quick conversation. And obviously, if there's anything in that conversation that we want to tape, I'm going to come back and tape it.